Hi, everyone. Thank you for joining our quick pitch today. I'm Kat Delgadillo here to co-host our event. And we have Hall Martin here to give us a little more information about 10 Capital. Hall?
Great. Thanks, Kat. I want to thank everybody for joining us today. We have another great round of presenters today. We have a great panelist, Drew Tulchin of the New Mexico Angels, who will be here in a moment. But before we kick into that, let's talk about the 10 Capital and what we do, give people a chance to get into the room. At heart, 10 Capital helps startups and investors connect for funding. And we have online events, in-person live events, and then dinner events. So lots of ways to connect with investors in a structured environment. Let's go to the next slide. What we do is we help coach on fundraise strategy. We help with the deck. We help with the presentation as well as the strategy for fundraising. We also do a series of events to help you engage with investors, and then we help with follow-up. The key with investing is you have to build a little bit of relationship with the investor, and our program is designed to help you build that relationship. And so in short, we provide the legwork and save you time and money. We've raised over $1 billion now of funding for a company since we started in 2009 under the original name of Texas Entrepreneurs Network, but we're now called 10 Capital. Let's go to the next slide. So in addition to helping startups raise funding, we also help high net worth individuals start family offices. We also help VC funds raise funding from limited partners, primarily family offices. We help angel groups find members. So at heart, we're forming capital for the startup ecosystem. We're fostering the community up and down the tech stack, so to speak. So we're trying to get more funding going into the early stage. Next slide. We have several online events. We also have, in addition to this one, the quick pitch, which you see there in the middle, which is for tech companies. Each company will get 10 minutes to pitch, 5 minutes of Q&A. We have 5 presenters today, and then breakout sessions at the end. We also have the Family Office Roundtable. It's a 2-hour session of topics relevant to the family office. We help foster the virtual family office. There's a lot of $25 to $50 million AUM individuals who are looking to start a family office, and we have programming and content to help them do that. And finally, we have the Life Science Syndicate event, which is the same as the quick pitch, but it's for life science companies, those on the FDA path. If you want to learn more about 10 Capital's events, just go to 10capital.group, look at the events page, and you'll learn about all the events that we have going on at any time. Next slide. If you're a startup and you are raising funding and you want to be pitching as you see these others doing today, take a picture of that QR code with your camera and fill out the form. And we'll have a discussion with you to see if this is a good program for your fundraise and see if it works for you. So with that, next slide. We also have a program called Investor Connect. It's a podcast program. We've done over 850 interviews online with angel, VC, family offices, and other investors on what they invest and how they invest in startups. In addition to that, what we do is we have a startup funding espresso. In the time it takes to drink an espresso, you can learn something about startup funding and investing. These are 300-word micro blog posts and about a minute and a half audio podcasts that we put together. We've done over 2,000 of these. And when AI came along, we decided to put all of them inside an AI chatbot, which we call Ava. So instead of looking for the answer, all you have to do is type your question and Ava will give you the answer by searching all of those funding espressos. Let's hear more about it with the audio here.
Hi there. I'd like to introduce myself. My name is Ava, your personal AI venture assistant. I'm your new best friend in the world of investing in startups, the 10 Capital AI chatbot. I'm here to make your journey through the startup ecosystem easier, faster, and a lot more fun. Need help finding your next big investment? Or maybe you're a founder looking for fundraising tips? I've got you covered. I pull all my knowledge from over 500 blogs, countless podcasts, and even some nifty calculators, like the How Fundable Is Your Startup tool, to give you the answers you need. So how do I work? Easy. You simply go to where I live on startupfundingespresso.com and look for me in the bottom right. As soon as I appear, go ahead and click on me to let me know you're here. And then there you go. All your questions answered at your fingertips. Whether you're into health tech, biotech, life sciences, or any of the other exciting fields out there, I'm equipped to help you navigate the trends, challenges, and opportunities in each one. Got a question? Just ask. And guess what? I even pull insights from the 10 Capital Network podcast on Investor Connect. It's packed with expert advice, success stories, and more, all designed to help you succeed in the venture capital world. So what are you waiting for? Let's chat. I'm here 24/7 to help you find the right answers, connect with great opportunities, and make the most out of your investments. See you on startupfundingespresso.com.
Great. And with that, let's go ahead and meet our guest investor today. We have with us Drew Tulchin, the director of the New Mexico Angels. Been working with Drew for some time now and really enjoyed working with him and his group there. Drew, can you tell us more about yourself and what you guys are doing these days in the New Mexico Angels?
Sure, thanks. Just a volume check here. Am I sound okay for you, Hall, and for everyone else?
Sound great.
Good.
Good, thanks. Thanks everybody, and thanks for 10 Capital Group. It's a group that's doing a lot of good work. It's a group that we respect because they give before they get. And so appreciation to Hall and his group. I'm president of New Mexico Angels. We're a 22-year-old organization based in New Mexico. We like to work with New Mexico companies, New Mexican entrepreneurs, and companies that can make a difference for our state and our people. So you can imagine water, renewable energy, and other health-based efforts in particular, but space and other sectors of interest to our economy here in New Mexico are also very interested. And so hats off to all of you today who are investors, startup or high growth companies yourselves. We are a network of angels. We are legally a 501c6, like a chamber of commerce. And we have a 501c3 charity nonprofit arm for education. And we're here to work together to help our companies grow.
Great. Can you tell us a little bit about the restart of the New Mexico Angels? What did you do to get that going?
Yeah, so you know, COVID, many of us may be a distant memory or memory we want to forget, but it was hard to bring people together. And in angel investing, you got to have trust, you got to have people working collaboratively, and those were difficult things in a COVID era. We had been a supper club; we'd meet every quarter for drinks, food, hear from some companies, and literally we were shut down. The place we were used to go to was legally shut. And so what do you do when you have a cohort that wants to help startups in an environment where it's difficult to do so? We were down to about 38 members. And so we started working online. We started working with other partners, both in New Mexico and other places like 10 Capital Group. And the motivation of people being willing to come together. So entrepreneurs not being afraid of meeting people online, being willing to not say, hey, sign an NDA, but hey, let's have a conversation. And then investors saying, hey, I know this is a little awkward and uncomfortable, but let's come together, meet other entrepreneurs, let's meet other investors, and then let's help our entrepreneurs and find out what they need and what we call time, treasure, talent. Everyone wants a check. Sure, that's easy. But maybe you need a member of your team in your C-suite or otherwise. Maybe you need a Rolodex relationship or sales or a partnership relationship. And so those are the things that we really seek to help our organizations around.
And what's the current state of the New Mexico Angels? How many members, how much funding, how many deals, that type of thing? What is it looking like these days?
Yeah, New Mexico Angels, again, 22 years old, and we're up to 191 relationships. So what's that mean? That means a member, a sponsor, a partner, or an affiliate. And so we have a lot of ways that we can be the open hand of relationship to get a handshake to have people come in and help. So we always can take more sponsors, partners, and others who'd like to be part of the New Mexico scene, and we welcome that. And then in terms of capital, we've been moving more than $2 million a year, which isn't a huge amount in the angel world, but for a place like New Mexico, where the storyline is that it's a poor place, we've done pretty well working between 10 and 14 companies a year. And then in addition to the direct checks that we do what's called leverage capital, which means we're able to do introductions, we're able to do syndications, we're able to find other grant and non-dilutive capital for our companies. So we want it to be a plus-plus relationship all around, Hall.
That's great. We appreciate the introduction there and looking forward to your comments on the presenters we have today. So with that, let's go to our first presenter. We have with us Aether Holdings with both Woody and Frank with us. If you guys can go ahead and launch your slides and kick off. For those in the audience, if you have any questions, please put them in the chat box. Each company will have 10 minutes to pitch, and we'll have 5 minutes for Q&A, and then we'll have breakout sessions at the end of the day. With that, go ahead and kick it off, Woody and Drew. Woody and Frank.
Hey, Hall. Thank you for having us again. We really appreciate it. And, I will say, just to kind of kick off this presentation, because it occurred to me, I didn't mention it last time, Hall, but we're actually sitting as well on the other side of you guys, the angel investors and the VCs, because I'm actually one of the founders and principals of 28 Ventures. We were one of the original check writers into Aether Holdings. And this was honestly one of the easiest checks for us to write because of the fact that we're market guys, all my partners trade, and Aether is actually in that space. And with that, Woody, can you go to the next slide? Yeah, this is all, regarding our IPO, which should be happening shortly. So just what we are, Aether. Aether Holdings is a fintech company, emerging fintech platform. We have proprietary research, data tools. We have clients currently that span from the retail space to the institutional space. Actually, a couple of our customers are pretty well known active day traders. One of them actually had a documentary written on him, just to kind of give you an idea of who uses our research. Woody, next slide. And our mission is pretty simple, and this is pretty much what we drill down to everybody in the institution and organization of Aether. We are here to empower investors. We are dedicated to providing all our users with the most powerful combination of data analytics tools. We have a handful of analysts that actually work under the Sentiment Trader brand, which is a wholly owned subsidiary of Aether Holdings. And we are really here to even the playing field, because again, the reason this was one of the easiest checks for us to write initially when we got into it is the fact that we understand the markets. I was actually a subscriber to Sentiment Trader before we got into this investment, and it kind of fell on our lap. Woody, next slide. And because of the fact that we are in a lot of tech companies, the original business was really a newsletter business with some very good analysts and technologists that have built their own proprietary trading tools. What we saw was data. We realized that there was a ton of data, 27, 25 some odd years of reports, different data sets, different tools for investing. And where we are right now is we are a newsletter business that does well enough, but we think that with the AI tools that we're going to be creating proprietary to us, we feel that we are really going to build one of the more robust and one of the premier AI fintech companies that are out there. And there's not many chatbots that are focused on AI, or rather on fintech. A lot of these large language models are kind of ChatGPT. They're wrapped over ChatGPT or one of the other LLMs. We are only focused on the financial markets right now. Our flagship platform is Sentiment Trader. It is one of the very well known. We think it's one of the more advanced market research platforms out there. Again, some of our customers and our trusted partners are professionals. They're just like us. They're day traders. They are long-term swing traders, commodities guys. And we have a very long history with them. We have clients that have been with us for 20 years. Woody, next slide. You want to take this, Woody, on the products, or you want me to go ahead? All right, I'll take this one. So our current product overview, as it stands, these are the tools that are kind of keeping us fed right now. We have our research report solutions. Again, one of them is a very long history of research reports from our main analyst. We have Trading Edge Weekly, Sentiment Edge, Caples Corner, and Model Edge reports. We also have a data API that's tied into that. And historically, what we've been doing is we give that data feed out to some of our more power user customers, and they're creating kind of in-house stuff for their own hedge funds and their own in-house trading platforms. We are planning to basically take this and make more sense of our unstructured data and make it into something that will be easier to kind of process for our existing customers and also grow the customer base. We have 3,000 sentiment indicators and charts. We really too many to name here. We have the backtest engine. We have the smart stock scanner. and the macro index strategies. These are tools that are being used on a daily basis by, I think right now we have about 1,500 or 12, I don't remember, it's 1,500 or 1,200 paying customers that use this data, and they're in different tiers of payments. Next slide, Woody.
So our current revenue model, we operate in a high margin subscription-based SaaS model with tiered pricing, as Frank mentioned. And we have institutional investors, hedge funds, and retail investors alike. Our strategy is built for scale. We take our model very seriously. We are also forging enterprise partnership to license our technology to financial firms that need AI-driven decision making. This is a must-have these days for any financial infrastructure, and if you are active in the trading world. And this is not just some small niche either. The alternative data market is expected to grow over $50 billion by 2030 between both institutional investors and retail investors alike. They're spending billions of dollars so they can get access to superior insight. So the winner in this place will definitely be the ones providing that data for clarity for anyone. Sorry. Like Frank mentioned, we have over 20 plus years of operating experience with Sentiment Trader with 250,000 followers across all our social media platforms and 25,000 subscribers going to our newsletters weekly, and including some very high profile clients, including some guys that you see on CNBC everywhere. And like Frank like to say, don't just take our word for it. We have the track record to show that. Some of our clients have been featured in all of these very respectable financial news, including CNBC, Bloomberg, Barron's. So these are some of the high-end clients that we have that's using our platform currently. And Frank, I'll give this back to you.
So thank you, Woody. So, going back to, we're back to the client testimonials, just in case. I don't think Woody mentioned it, but we're very proud of some of the people that we have that subscribe to us continually for, again, some of them for 20 plus years. I'm sure you know the names: Tony Dwyer, Liz Saunders, Keith Richards, not the guitarist. Next slide, Woody. I would like Keith Richards, but who knows? Maybe he is a subscriber. So our growth strategy is simple. We understand that right now we can definitely scale the newsletter side of the business. It's a great business. The profit margins are tremendous. We have a good following. The bottom line is that there's a lot of money to be made just on the newsletters, but we think that there's plenty of room for geographic expansion. Obviously, with only a handful of about 1,500 clients or so in America, there's a heck of a lot more traders than 1,500 people, right? The key is for us to leverage our technology and simplify the tools so that we can grow our subscriber base and also expand revenue through different products, leveraging machine learning, our technology, our years and years of data and reports. We are definitely going to be expanding. Woody, go back. Yeah, we're definitely going to be expanding into new technologies. That's already in the works as we speak. We are very much aware of the coming kind of shift in information and how much easier AI is making it with different chatbots. The fact is the chatbot market right now is already pretty big with the advent of ChatGPT. We believe that more specialized chatbots, like the ones that we are creating for Aether, will be very, very important, because that is what kind of will limit the hallucinations and will get you the best data when you have the kind of data that we're working with. And we're always investing in new analysts. We're investing in new research. It's just a part of the game that we are very aware that we have to keep reinvesting in. And we have no problem capturing new growth opportunities. one of the strategies after we go live on our IPO and we're publicly traded and raise our capital this month. One of the strategies is actually to use the shares to roll up potential newsletters or other technology companies that are out there that we have our eye on. So we're small, but we're scrappy, to say the least. And I think we have a pretty good track record with our strategies with 20 Ventures. We're going to kind of recreate them through Aether as well. Next slide, Woody. So we kind of went through the future strategy, so I'm not going to go over with them again. The highlights again of the investments is we believe we have a very cutting edge platform that we're building here and leveraging our data. We have some phenomenal analysts that are working with us, continually building new indicators, new strategies. We have a strong history, a strong track record in developing these this data set. And the key for us too is that we're not just a bunch of we are not just like a bunch of data being put into an AI. We're continually building better models. We're creating new data sets through the current and existing analysts that we have, and the future analysts that we will add, and build newsletters around them as well. So Woody, next slide. This is our competitive advantage. We believe that our position is pretty strong as far as our brand. Sentiment Trader, again, is very respected. We think there's a huge amount of potential to grow that brand. We have a very experienced and again, very incentivized team. We're committed to our innovations and what we're building in AI and machine learning. There's a ton of revenue potential because even up to this day, Sentiment Trader itself has never sold an ad. Financial advertising is some of the most expensive advertising that you can buy out there. The fact that we know exactly who we have, and everybody here is an investor, the fact that we know exactly the kind of money people have to spend is very, very valuable to advertisers. And, to this day, we haven't even opened that up. So you can imagine if we can hit our goal of having, 500,000 plus subscribers by the end of the year this year, it can get pretty crazy when we scale up that revenue just in advertising. Next slide, Woody. Go back, Woody. Yeah, so the industry overview is pretty self-explanatory here. The sector's huge. We're in the trillions, obviously, and we're continuing to grow. More people are becoming day traders. They're getting into the Robinhoods of the world, into the Moomoos and whatnot. So the industry overview is pretty good. And also the chatbot space is also growing significantly. Next slide, Woody. Yeah, this is our financial snapshot. And we can be happy to share that with you guys. Next one, Woody. This is the current management. I myself am actually heading up business development. I'm helping the company find potential acquisitions and opening up new markets for them. Nicholas Lin, who's actually also one of our principals, he founded 20 Ventures with me. He's the CEO currently. Suffices to say that that's not his normal role, but we have some very good ideas of who we're going to be placing in that position in the future. Nick is like myself. He's a capital markets guys. So as much as we love Sentiment Trader and Aether, we think that there will be somebody better to lead this company into the future, especially focusing on AI and ML and taking advantage of the data set. The key for us is getting to the IPO so that we can actually incentivize people to come with us. And I think we're actually going to be done pretty quickly. I think, so I don't want to take up too much of the time. These are our directors. David Mandel is actually somebody that has been very much in the AI space. He just sold his company, his last AI startup, to Oppenheimer for a good amount, and he's been guiding us in this space. Woody, we can just keep going because I think our time is falling short. These are our researchers, our research team currently, and we do plan to grow this as well as keep these guys on because they're awesome. And if you have any questions, we're happy to take that on. And Hall has our contact, so you can get it to you guys, and we're happy to take calls with anybody.
Great. Appreciate that, Frank. My first question is, tell us more about your data. What is the content of the data? Where did it come from? How proprietary is it? What more can you tell us about the data that you have there?
So in what we're in the chatbot and the LLM that we're creating, the data comes from a couple of different places. Obviously, the usual suspects of the Bloombergs, the FactSets, the Thomsons. We have those data feeds that we're kind of teaching our chatbot on. The sentiment trader data is expansive. It's 20 something odd years of actionable insights and data, 20 something odd years of reports that have been written by Jay and the rest of the team. Again, these we know they're valuable because we wouldn't have the clients we have for the amount of time that we have if we weren't good. I think everybody can sympathize with the fact that sometimes you get a tool, you think it's going to be a killer tool, and it's not, and you unsubscribe, right? We have a very, very loyal customer base, and it is because of our data. Currently, actually, we do have an AI tool, just not as user-friendly. It's pretty much for the power users. However, it's not a simple thing that anybody can build data sets or build output of that data easily. But
Right.
it is very good and very actionable, and a very long history of data and reports.
Great. And Drew, what's your questions?
Yeah, thanks. So I know a few people rolled in late and I'm not in your sector. So could you just give us the 1 sentence elevator pitch, please?
I guess the one sentence elevator pitch is Aether is about empowering investors through the new use of AI and machine learning and all our data, and making that
Great.
data simple for retail investors to get to.
Okay. And then you mentioned already having customers. Are they customers with this product, or and is there a raise? I didn't quite get if there was a raise and an ask to this audience.
Yeah, so we're probably a little bit different from how everybody that comes to Hall. I've known Hall for some time, actually, and I understand most guys come here looking for capital. We are actually, because 28 Ventures, my fund, our thesis has always been, let's get the startup to NASDAQ as quickly as possible. We don't like to sit on an investment and just keep it there and not have our liquidity. So we're a little different in that we actually our IPO, we're going out as a small nano cap, micro cap company, about 60 million valuation or so. Regarding that, really for us, it's about awareness. We feel that Hall has a really good audience. Intent Capital has a good audience. And look, if you think that our company can be valued in the future at $250 million or $500 million, and you're looking for that 10x, we certainly believe that. If you're looking for what a normal VC or angel is looking for, we think even at IPO we're priced very, very well. And I don't think I don't think there's any question that any company going out now is an AI. Whether it's an LLM or chatbot or whatever, we see the valuations. I'm not looking for those valuations. What I'm looking is to build the company into something robust and something that's going to have a long standing. So to answer your question, we don't really have an ask per se, but if you're interested in talking about the IPO, we would be happy to direct you to the lead underwriters. We are going public in probably we think 2 weeks, if not sooner. We're already past the SEC questions, NASDAQ questions. Next week, we're doing the calls with the bankers in New York. And your other question, I'm sorry, you were asking about our customer base?
Yeah, and first, great success. Yes, so I was asking about customers. So I heard 1,300, 1,500. So why don't you share people what the growth for subscriptions looks like, since I heard a SaaS model.
Oh, yeah, absolutely. Listen, that's one of the things that excites me the most because I'm very familiar with the newsletter industry. And when we came into Aether/Sentiment Trader, we realized quickly that the management that was running this business, they were good at what they did as far as the data and the reports. They were not good at acquiring customers. What we're doing is bringing to the table people that are really good at that. We're actually bringing a crew that comes from Stansberry, that comes from MarketWise, and these other newsletter companies that know how to convert customers. Our subscription is anywhere from $4.99 a year for a low-end subscription, all the way to $1,500 or $1,900 a year. We have right now about 1,500 paid subscribers, and they're very, very loyal subscribers. We also have about 80 or 90,000 free subscribers just to our Sunday newsletter, we have a click rate, like an open rate of that, of like almost 85%. Like, it's ridiculous. I've never seen anything like that. Up to now, we have never sold an ad, ever. We are changing that because we understand that what you can get even on the free advertising for a financial newsletter is massive. It's the best money you can get in advertising, in newsletters, and just general internet money, right? So we are just through that. If we just had that and expanded that, doubled our subscribers every year for the next 5 years, we could easily get a $30-40 million business, and hold it for 10 years, sell it for 300 million, right? What we see,
we're at the end of our time, Frank.
Oh, I'm sorry. Listen, I'd be happy to elaborate more on what we're doing at Aether.
Great. Thanks so much. We'll have time in the breakout rooms for more detail, but great presentation, Frank. Thanks, Woody, for that. Let's move to our next presenter, Print3D. Lance, if you could launch your slides and kick off when ready. We see your slides.
All right. Yes, sir. Hey, thank you. I'm Lance Throkio, co-founder of PRINT3D Technologies. And as you can see here, America has a real problem. We're short 7.3 million affordable homes. Construction costs are up over 30% in the last 5 years and rising. The industry is stuck in the past and people are struggling to afford homes. At PRINT3D Technologies, we are solving this problem by disrupting the construction industry. And we're doing that by bringing automation, AI, and 3D printing to construction to make it more affordable, sustainable, and scalable. But before I tell you how we can do that, let me tell you how we got here today. So having built several homes myself through builders, I've experienced firsthand how horribly inefficient the construction industry is. And in 2019, my family lost their dream home to mold. And through building in the next house, it took twice as long. It was 50% over budget. And at that time, I just realized there had to be a better way. And I was thinking, if it's this inefficient and expensive for me, even while using one of the best builders in Dallas, how much more impactful is that to people that are struggling to afford a house in the first place? The reality is the system is broken, and where there is a broken system, there's an opportunity for innovation. And that's why we built PRINT3D Technologies, to solve a real market failure. Here's me and my co-founding partner, Craig, outside of one of our 3D printed homes. So to give you a little history, my family's invested with Craig in his residential real estate portfolio business for over 30 years. And in 2019, he bought a 3D home printer. Took him about 2 years and a bunch of retrofits to get it running. And he successfully printed the 7th and 8th house, 3D printed house rather, in America, which was a huge accomplishment. And as a third generation owner of a manufacturing company that is highly focused on automation, I became fascinated with this technology and started looking more into it. And through my experiences building homes, just the inefficiencies were shocking to me. It was especially contrasting that from manufacturing, where I come from, where efficiency and automation and precision are the name of the game, the baseline for playing. I was just shocked by the lack of these principles in construction. That frustration sparked an idea for me. What if we could apply this manufacturing mindset with a focus on automation, AI, and robotics, 3D printing, to disrupt the construction industry? I cast my vision to Craig, and he loved the idea immediately. And we had the perfect combination of expertise, his background in real estate and construction, mine in manufacturing, to tackle one of the largest problems in the world, not just our country. So in 2023, we made our move. My company, All Metals Fabricating, invested $750,000 to match what Craig had put up to that point, and we created PRINT3D Technologies. Our mission is simple: to revolutionize construction, to make it more affordable, more efficient, and more sustainable. We're not just building homes, we're manufacturing and selling machines that we equip builders worldwide to embrace this new technology. So let's understand the opportunity and how we got here. For over a century, American homes have been built the same way. It's crazy. Like, what other industry has something not changed for over 100 years? Wood framing, labor-intensive construction. It's worked though, it fueled, growth, communities, supported growing families, and was the American dream. However, sadly, that dream has slipped away due to rising costs caused by skilled labor shortages and rapidly rising material costs, and compounded by the industry's inability to adopt to new technologies. This demonstrates how the American dream is not slipping away, it has slipped away due to rents rising much faster than incomes, as you can see here. Average home prices are up more than 100% since 2000, while wages simply haven't kept up. Construction costs are up 30% just in the last 5 years, and that's not including the spikes we're about to see from all the tariffs. The industry has been forced to use less skilled workers and inferior materials. It's just a race to the bottom to try and, get the best cost product out there. And what that results in is a huge decline to the quality of housing. And it's a very harmful cycle for our future. As you just see, these affordable homes are not put together well. And so essentially the construction industry solution has been just throw more people at it. But clearly that's not working. And it's going to be compounded even further with all the deportations happening. So here you can see the affordability of houses in just 10 years has gone from 50% to only 16%. This is a huge problem, and it's drastically going down. And it's only going to continue to be exacerbated by the fact that we're only building 1.4 million houses per year currently, of which about 10% are focused on affordable housing. And currently there's 7.3 million affordable units needed. So that number is going to grow year over year. And the economics of supply and demand, the less supply, the more demand, the prices are going to go up. So it's a dangerous position. But we have a solution. So I don't know if any of you have ever seen a 3D printer, desktop style. We'll scale that up to the size of a house. Here's a picture of our patented machine, and it works like a soft serve ice cream dispenser, essentially, except on a gantry system. And it's controlled by a geometric code referred to as G code, which tells the machine which coordinates to go to and dispense that concrete to build the house, to build the wall system at least. So what differences does our solution provide? First off, it's 20% savings for a wall system that is far superior than traditional wall systems. Our wall systems are mold resistant, termite resistant, fire resistant, tornado and hurricane resistant. Look at the recent examples in California. There was one house left standing in Malibu, and that was a concrete house. Now, granted, it wasn't 3D printed. It's still the same materials. Rewind a few years ago back in Hawaii, there's one house left standing, and it was concrete as well. So these are much better product, much more sustainable. Insurance companies should love us. So we also, time is money, right? 30% time savings versus traditional construction methods. And so our wall structure replacing framing, sheetrock, which also includes tape embedded and texture, another trade, masonry, insulation, and paint. And so that's 5-6 trades you're removing right there. Imagine scaling that up across building 20 homes at once. So you're reducing the crews substantially. We also believe we can improve on this 30% time savings even more with some strategic partnerships and further advancements in the future. So bringing a precision, manufacturing style focus to construction will reduce waste significantly. Proper and precise planning using recycled materials, plus the fact that these structures are much more sustainable in the long run, will reduce landfills significantly over time. Lastly, 3D houses also reduce ownership costs. So the walls are much more energy efficient, resulting in better energy bills for the user. Also, they're just much more durable. And so just to give you a real example, we have 3 printed homes in Craig's real estate portfolio, and 2 of them been rented since 2021. And anytime there's been a change in tenant, the cost of between tenants is less than $1,000, around $500, which is essentially just cleaning the house. Contrast that with me. I lived in a house, traditionally built house, for a year with my family of 4, and I got a $2,400 bill when I moved out. So you can tell and my family wasn't exactly beating up the house. So you can tell there's a huge savings there for the homeowner or the tenant. Sorry. So here's a couple quick slides. This is one of our model homes. We have a handful of model homes. This is called the Luis. We have the full construction plans, also the G code created to run it. Here's an efficiency focused home. It's 840 square foot, single bedroom. And you can see some pictures here of the recent print that we did there with that model. So what is our competitive advantage? It starts with our partnership with All Metals Fabricating. You can see our world-class manufacturing facility here shown in the picture. Gives us full control over the cost of production, engineering for the printers we sell. This is evidenced by the fact that our model costs our printing model costs $175,000, and the cheapest comparable one on the market starts out at $1 million sales price through Cobot. This partnership, even more importantly, allows us to scale up production to meet any level of demand that any amount of builders could order these machines. There's no amount that where all metals fabricating could be the constraining factor of delivering these printing systems across the world. Next, our expertise in real estate experience and data-driven insights. This approach will allow us to streamline home construction nationwide. Lastly, as I mentioned, the manufacturing mindset, partnering with a world-class manufacturing facility gives us an efficiency focus and automated approach to construction. So what have we accomplished so far? As I mentioned, 2019 purchased the printer. 2021, we printed the 7th and 8th 3D printed homes in America. Since then, we've printed 5 structures, including a house for $100,000 last year. We've designed and built the 2nd generation of our machines, 2 of them. We achieved a top 10 worldwide rating for automating construction and a top 5 for 3D home printing. We developed an augmented reality app that allows you to pull up your phone and walk virtually through a house on whatever lot you desire. We want to further develop this technology to use it to train builders that operate the machine, as well as train trades on locations of everything so that we can get those construction times down. We also rebranded and launched a marketing campaign last fall. And then in 2025, we received our patents back for our design. The business pipeline, the sales pipeline rather, that we just launched in this past winter, we've already generated 2.5 in the sales pipeline, and we've invested $1.5 million to date. With all that we've accomplished and having done some benchmarks against other 3D printing companies, we feel this is a very generous offering to raise $3 million out of $15 million valuation. And that's going to be the first thing we're going to do is invest in a proprietary software that will allow us to take architectural plans and drop them into the software and automatically create the G code to run the machine. This will allow scalability for builders across the nation to just take their construction plans and automatically create their G code. It'll also give estimates on the cost of the wall system to give rapid quotes to, as a contractor to builders. And then most importantly, as it relates to this audience, it will create a SaaS model revenue stream for us, which as a technology company is critical. Next, we want to invest in R&D. Specifically, we want to develop a brick-style print head that will appeal to traditional architecture styles. So right now, the beaded look is a big, hurdle for people. It's a new thing, and they're not used to it. So we want to develop a brick-style print. This will also cut down print time in half. We want to hire a dedicated R&D team to support ongoing innovation. As a tech company, you got to be constantly, there's no point of arrival. You got to be constantly reinvesting and improving your product. And so we don't want construction opportunities to limit our ongoing R&D. And then lastly, we want to build additional machines so that if we get when we get a large development contract, we can deploy more than just 2 machines, also have machines in inventory to sell to builders without having to deal with a lead time. So here's some very conservative numbers. I believe in setting goals to crunch them rather, and under
We got 2 minutes left.
Yep, over delivering. So this is based on printing and selling machines. So 9 structures printed, 2 machines sold in the first year, 40 and 8, 75 and 24, 125 and 48. So I'll say that market adoption by builders could drastically increase this curve. Keep in mind that we're selling these machines at 400,000 with a cost basis of 175. So if we went to 100 machines, that would boost the revenue by $20 million in 2028 and profitability substantially as well. The TAM is huge, 54 billion. This is just based on 1% adoption for commercial construction, 3% for affordable housing, and 1% for custom home building. So to close this out, I want you to imagine this. I want you to imagine an entire community being built by 3D printers, 20, 30, 40 printers out there. And with what we call a house in a box showing up for every house that's got everything loaded for the house, the appliances, the roof, HVAC, everything to allow the trades to get in and out of the house as quickly as possible. I want you to imagine a happy family like this moving in after just 3 months of construction at an affordable house. And with this type of solution, combined with all the other solutions coming out, we can correct the trajectory of affordable housing in this country. This is more than an investment. It's an opportunity to fix a broken system and the future of American housing. We have the technology, the expertise, and the urgency to make homeownership more accessible with a high-growth, scalable business. The time is now. Will you join us?
Great presentation. First question is, what states can they build homes in currently, and how do we do that?
So currently, the biggest limiting factor for this technology being embraced, nationally, is municipalities don't know how to evaluate the plans. So currently, we're limited. We can print in all 50 states, but we're limited to rural areas and count in cities that have embraced the plans, which is just a handful. So it's going to take a third-party body to come in and validate that, and that's already in the works.
And what is the average price for these? How long is the turnaround to build one?
So depends on the size of the house, but we printed one for $105,000 last year. That was an 840 square foot. The Luis that we could print for about, we could build the entire finish out for about 250. I would say depending on the 3 to 6 months between the two, Luis being a little bit larger.
Great. And that's it for our time. Thanks so much, Lance, for a great presentation. With that, we'll move to our next presenter, FIntegrate. If Chris, you could launch your slides and kick off when ready.
All right, you guys seeing the screen now?
They're coming up, and we see them now. Kick off when ready.
Very good, thank you. FIntegrate Technology, let me get over here. We're a fintech company that focuses on collections and recovery, asset recoveries for banks and credit unions, as well as fraud and dispute management transactions. So we have been in the business. I've been in fintech for 21 plus years, and you'll see how this is building to the company that we have today. So we're offering $1 million convertible note to help us fund some immediate expansion in the sales and development areas of our business. If you're familiar with banking, this is not going to be a surprise to you, but if you're not, you're probably going to be shocked that of the 10,000 roughly banks and credit unions in the U.S., many of them, the majority of them, are running outdated, legacy, archaic software to process your transactions, or are running a manual process altogether when it comes to dispute and fraud. So what our products do is they automate the collections and recovery process to identify delinquent accounts sooner and to recover monies faster, and then track all of the financials from pre-delinquency risk scoring through to post charge-off asset recovery. We have a shadow accounting system built into that product that helps the bank maximize the revenues that are coming in and categorize them properly for the feds and for the auditors. So in the fraud space for dispute and transactions, you'd be surprised how many banks today are running spreadsheets. There are no automated process, and they try to keep up with 1,200, 1,500, 1,800 disputes a month in a spreadsheet in a manual process. So of course, you can imagine this leads to high operating cost, inefficient fraud handling. They pay substantial fines and fees for not conforming or having a system of record that conforms to all the regulatory compliance requirements, and just excessive overall losses and operating costs for these. Our products help automate this system, or these processes rather, and then integrate back to all of the other banking systems through their APIs or through different manners to automate that process, allowing us to have an auditable system of record in each case. We offer 3 main solutions. The Fusion CRS is for collections and recovery. As I said, it's a software-based application for the back office. So we're not the ones actually running the collections process. It's the banks and the credit unions that are emailing, texting, click to pay for their clients and communicating with their clients on the disputes. We handle the software that integrates with the banking system to recognize when a delinquency is about to occur or when it does occur, and then work it all the way through the process. Our second product is Fusion DMS for dispute management, and that tracks disputes from initializing the intake of the dispute all the way through the process through resolution and reporting. There are a lot of steps in between, including communicating with the end user, the client, the merchant, the card issuer that the bank or the credit union has to follow, document, and do so in a timely manner, and then prove to the regulators on a quarterly basis that they did service their customers accurately by giving them their provisional credits and tracking things properly for them. Our system automates this entire process from click to pay to the customers, to the communications, the letters that are required by law to be sent out for the information, and the, um, the regulatory side of it. So we tell them you have 10 days to respond to this, you're late responding to that, and it tracks to keep them in compliance with all of the regulations. And our third product is Fusion LRS, which is the historical business that I'm going to tell you about here in just a second, that I've been in two companies previously. We've built and sold doing data access and integration for banks that are going through mergers and acquisitions. Typically, there's two different systems, the acquired system and the new system. What our products does is take all of the historical transactions, loan documents, check images, reports out of the old system. Today, we bring it into our browser for long-term research, or we move it into the new bank's go-forward system. So that's a business we've had twice before. This is kind of the 3.0 version of that. I like to say that I love this comment from Mark Anderson that says, talking about AI, that the future's here, it's just not evenly distributed yet. I think that's true. So what we're going to use this first round of funding for is to land and expand more in the sales and marketing to capture more market share. Some of that will be used towards the end of this year for additional development and building out the AI and data analytics portion of it. We have a lot of analytics built in there today, but no AI. And then in 2026, we're using that funding plus potentially a Series A to go more into the AI based modeling for delinquencies and for risk scoring and fraud. So the total addressable market, as I said, in the banks and the credit unions in the U.S. are about 9,500. We're focused on that center market of about 5,500 banks and credit unions. They range in assets from $100 million to about $10 billion in assets. We have customers today above that at 200 billion. We have some below that at 100 to 85 million. So part of the strategy with this first round of funding is to go get the logos from the smaller community banks, so that making it easier for them to adopt our process and our system from a more simplified sales process. Because they're using manual spreadsheets today, so that should be an easier grab there. Than obviously selling a $10 billion bank. So, but our goal is to really focus on the $100 million to $10 billion market. Some of our NASCAR slide, as I call it here, some of our customers we have today, we have about 95, probably close to 100 clients installed today and running on the system. About 40 of them on the collection and recovery product, and some of them have been on that product for more than 10 years. Our Fusion DMS for dispute management was released at the end of 2023. And so we have 17 installed and another 15 that have been sold or in the implementation pipeline now. And then the data conversion for the M&A business, our Fusion LRS, we got into that business in the fourth quarter of last year, kind of just what we've always been known for. And we have a lot of opportunities coming to us through the recent M&A announcements. So we've got about 40 of those that are in process that have been signed, and we're in the process of converting data. On the right-hand side of your screen, you're going to see some of the largest players in the market today for core banking technology. These are companies that I've had long-standing relationships with or have sold other businesses to, and that are referring or reselling our products and services today. One of the first additions we're adding to the sales team is a business development manager to be able to go and work these accounts more thoroughly to get more products and services out of them. Then on the left-hand side of the screen, you can see a sample of some of our customers, some of the large ones and some of the smaller ones across the smattering of banks and credit unions. Our management team, we've had these 4 companies prior to this one. Many of these guys have been with me in the last 2 companies. Jason Alfano is our CTO and co-founder of FIntegrate, was with me both at Jack Henry & Associates and at our last business. Jeff Harper comes to us with extensive payments background in fintech and banking, and has had a couple of successful exits himself. And so Terry Nelson was the one that we acquired the Fusion CRS product from in 2021. So we've got a great team of experienced senior management that have worked for large companies and startups and bootstrapped themselves. So we feel like we've got a good team here, and we know what our outcome is going to be. Here's a list of some of my exits in the past. The bottom four there, have been sold to public companies or private equities over the years. Probably the last 20 years I've been in the market, and then of course FIntegrate Technology is where we are now. So I can let Ray. I'm gonna let you speak to our total revenues here, but essentially to give the background is we bought the Fusion CRS product in 2021, invested heavily in our people and our process so that we actually have clients on the street with a proven track record of success. Our product and our implementation process is now proven and has been refined. And now we're going to go out and get the market necessary to continue our growth organically. Right?
Yeah, hi. Can everybody hear me?
Yep.
Yes.
So I'm Ray Martin, and I'm an investor in the company. I was a founding investor, and I've been helping Chris and Jason along with building up the business. So as you can see, the revenues have been growing. Basically, the company is in a point where we've got really good product fit. We've got customers signing 5 to 7 year contracts that are happy with the product, and good management team. We really need to raise some money to bring on some soldiers here to sales specifically, and some more development resources later in the year. But sales, we've got a big addressable market in front of us, and so direct sales is probably the best way to do that right now. We will add a partnership person later on, but we really want to kind of go out and expand sales and marketing and get some new additional customers in here and position ourselves to do a Series A in 2026. So revenue growth has been good. We've been, we bounce around break even. Company's got about $500,000 in cash in the bank, and we're in really good shape. The other thing I'll say is I invested in this because of Chris and Jason. And these guys, Chris has done 4 companies before. They've all been bootstrapped, so he's an efficient user of capital, and they've done a great job building the business up. So we're raising $1 million, and it's a pretty standard deal. It's a convertible note, 20% discount, post-money valuation, 3-year term, 7% interest, minimum investment 100,000. We'll do less than that. We've raised 180,000 so far, so and we just started the process, so we've got a good start.
Great.
Yeah, and just talking about exit, there's a lot of, as you know, software companies. There's a lot of M&A that goes on there, and so there's some very large software aggregators. There are 8 of them. A couple of them have already approached us. We just feel like we're not ready to sell yet at $1.8 million in revenues. But one of them is $12 billion public company. Private equity, core processors, adjacent software companies that sell software to banks. Those are the kind of businesses that we think will be very interested in buying something like a company like FIntegrate.
Great, Ray. Great presentation, Chris. Drew, what's your first question?
Yeah, thanks, folks. Clearly a lot of progress here. So there's a bunch of people on this call. Not everyone will write a check. Can you share a couple of things that kind of, the village can do to help raise the child, other things you guys might need other than just a check?
Sure. I mean, the introductions at community banks, while we've been in this business for 20 years, and we know a lot of them have sold to more than 5,000 community banks and credit unions in that time. They all have this need for both fraud and dispute and collections and recovery. So just to introduce you to a conversation to start with, to say what they're doing today and see if what we have is a fit or we can be of any assistance to them.
Great, thank you. And then given where you're at now, you're in revenues, did I get that right? So run me back through kind of where you're at and then kind of what the next few customers you think look like.
And the back up here. So we ended, is this what you're asking about, where we ended 2024?
Yeah, go ahead.
Yeah, so we ended that at $1.8 million. We had the first quarter of the year where we only had 1 salesperson and no sales leader on that, with some operational changes that I made. So that's really just 3 quarters worth of of actual focused growth there. We've implemented stages with HubSpot and data analytics on our internal sales process as well to be able to grow and be able to analyze our own growth and sales trajectory there. 2025, we really are focused on all three verticals. The M&A market segment, which is picked up with the banks and credit unions right now. Our dispute management product is just is the hottest thing going, I guess, because there's such manual processes today, and fraud has continued to increase. And then the collections and recovery inside the credit union space, delinquencies have gone up about 32% in the last 6 months alone. So we think there's really a lot of greenfield in that as well.
Great, thanks. So Hall, let me pass the mic to you, and then could I have a word before the next person starts?
Sure. One question from the audience. What is the market cap of the bank software company?
Right. The bank software company, are you talking FIntegrate or?
The bank software company. I thought they were talking about, yeah, you guys. It's FIntegrate.
Well, the way we structure the convert is it's a $12 million conversion rate, but with a 20% discount.
Okay, great.
And it converts at the time of a Series A or an exit.
Right. Okay, great. That answers the question. What percent of the revenue is recurring?
About 700,000, so about 40% currently. And we expect that to go up dramatically over the next 5 years as we add more customers with the long-term contracts that we're signing.
Great. Drew, what's your last question?
I actually had more of a comment. So if we're on the last one, should we thank FIntegrate first? Yeah.
Yeah, great job, FIntegrate. Drew, go ahead.
Yeah. So first, we just heard three great, very high quality presentations from some seasoned, experienced people. So I wanted to give people inside baseball because I thought that'd be fun. You got 15 minutes. This is fast and furious. My advice to entrepreneurs is to use less of that time. My ideal would be that you're only using 8 minutes because Q&A is a lot more fun. It helps us questioners learn a lot more about you and about your company, and also how to handle questions. So the three that are coming up get the advantage of having this comment, but if you could reduce, be as brief as possible down to 8 minutes if you can. I know that's a little unfair because I'm throwing you in the water. And to our first three, again, a lot of experience, a lot of good stuff. I think my general feedback would be I heard a little bit too much of the problem. I only need to hear the problem once. Most of us know about it. And then one little trick that people can use, maybe not today, but in the future, is we're like the X of Y, but Z. So we are the Uber of my sector, and we're better because of these things. Back to you, Hall.
Great advice, Drew. With our next presenter we have with us, we have GridMatrix. If you guys can go ahead and launch your slides and kick off when ready.
How's that?
That looks good. Go ahead.
Good. Sorry. Okay, I'll try and incorporate some of that great presentation feedback and keep us on track and be brief. Our X and Y is that we are Palantir for transportation. So we are disrupting the billion-dollar civil engineering space and doing that in a software-first approach by using AI tools and a hardware-agnostic approach to help cities and ports and airports understand what's happening in their physical space around them by using their existing sensors. Oh, and by the way, I'm Mike Areen. I'm the Chief Operating Officer of GridMatrix. And just in case I didn't get to the slide, we're raising, we have $1 million left on a $3 million price round at a $9.2 million pre-money valuation. Problem briefly, our founder was a supply chain manager at Apple, traveled the world, saw that a lot of other countries had much better operating roads, and saw that there was a lot of advanced sensors being used. He wanted to create kind of an iPhone for intersections, but he went and talked to a lot of transportation managers and other infrastructure operators, and they said, basically, we've been buying hardware, especially cameras, for 40 years. What we need is someone to plug into them and make them work. It's very expensive for us to buy and install new hardware. So we went and built a platform that plugs into existing sensors, including LiDAR, radar, inductive loops, but primarily cameras, and we turn that into the data set. This is a picture of our solution. Our initial kind of go-to-market is focused on primarily traffic KPIs, but we look at congestion signal data, emissions data, safety data, and we monitor in particular safety incidents between vehicles and people. And we do that in a way where these operators can understand how safe a prospective intersection is long before they will get real world feedback. So something like there's 1,000 near misses for every accident, and for every accident, only one in 1,000 or two is fatal or near fatal. And it tends to be that those near fatal incidents are the ones that actually get fed back into the operators that they care about and cause changes. But with AI and modern technology, you can figure out in a few days what you're waiting around for a couple of years to find out traditionally. So that's the problem, the solution. About our company. We're already deployed at the world's busiest tunnel. Port Authority of New York and New Jersey was kind of our large anchor customer. We're now deployed at Port Newark through them. That's a top 3 U.S. cargo port. We're deployed at Dallas-Fort Worth Airport, also a top 5 U.S. cargo airport. We have 15 other deployments across the country. We've been successful in winning statewide contracts with Texas, Georgia, and Arizona. These are important because the primary way you sell software to public institutions is through an RFP process where it's put out for a public ability to bid. That's lengthy, time-consuming, and risky. But when you have these statewide contracts, you can actually single source and go directly to the customer. So that's a huge advantage for us as we go to market. We're cloud-based, scalable, so it's very easy for us to add customers to ramp up. We don't have to build additional infrastructure, although some of our clients are now requesting on-prem solutions, which we also support. We just ship them out a server. It's a giant market, the U.S. civil engineering market. I'll get more to the TAM later. Last year, our revenue was $600K. We expect to about do 5 times that next year. Again, these are our big paying logos. Dallas-Fort Worth, I mentioned. So we're actually deployed at the airport. They care about their traffic in and around the airport, as well as other physical movement of pedestrians. Cincinnati Airport, Port of Miami, and Bedrock Detroit, which is a large commercial real estate operator in Detroit, and it's our first large private customer. As I mentioned, civil engineering market. It's a large, growing, above $1 trillion market. It's primarily dominated by large public players, Jacobs, AECOM, and Parsons, who we now often find ourselves competing with. Going back to our kind of analogy of calling ourselves Palantir, Palantir used the same approach to kind of take on market share from the existing consultant-first players like Booz Allen. They saw that, as the world was digitized, governments needed a software-first solution. We're doing the same thing. We're building a software-first company because that ends being the kind of the key part of the requirements for many of these customers, as opposed to these consultant-first companies that then have to subcontract or figure out how to build the software, and they do that inefficiently and charge a lot more than we do. Kind of skipped around, but I'm trying to go with the short theme and I can answer questions. As I mentioned, we're raising now $3 million. We originally set out to raise 2, but we're going to add an extra $1 million. And it's at a $9.2 million pre-money valuation. It was led by AVC, who also led our seed round. They put in about $700,000. We've raised an additional 1.5 on top of that and need another about $800,000. This is our team, but I can kind of conclude with the slide. I have a long time background in startups. Nick's a first-time founder. He comes from Apple and McKinsey. And Eric Valasek comes from Notto, which builds OEM cameras for OEM automakers. So he knows the space, especially the computer vision space very well. I'll pause there and open up for questions.
Good presentation. Thank you for the timing on that. Drew, what's your first question?
Yeah, excellent presentation. Very well done, as have the other ones earlier today. So this is a really high quality day with some quality companies here. You know, you did the unfair thing that you did such a good job with the presentation. I have to ask you a couple of mean questions, if that's okay.
Go for it.
So you're raising $2 million. Share a little bit about the terms, and then let us know, like, have you thought about debt or other types of non-equity to try to help capitalize this company?
Yeah, it's funny. Someone asked me that yesterday, and I hadn't gotten that question in a while. We've talked to a few of the venture debt firms. You know, probably at this stage of the raise, it doesn't make sense. They kind of like to come in at the beginning of the raise, but I think probably we will start to talk to them, ramp up for our next capital raise. Although I'm still open to it if someone comes in with an interesting proposal. And sorry, your first question.
Yeah, just run us through the slide's a little small for my eyes. So run us through the terms.
Yeah, it's standard preferred terms. You know, preferred shares, you know, dollar back, pro rata rights for major investors above 250K, which would also apply to an SPV if an angel group chooses to do that. 9.2 pre, it'll turn into something like a 9.4 post, or a $14 million post.
Gotcha. Great. And you said 500K in revenues last year. You think 3 million this year, 1.5 to 3 million ARR. Is there a difference in quality of revenues, meaning, you know, one time, recurring, big customer, some customers are better than other, that type of thing?
Yeah, so the general, this is, you know, what's typically called GovTech. The customers are very sticky. It's very easy to recur, but they're very hard to get. So it's fairly high quality revenue. Something like 80% of it will be ARR. That number will go up. You know, we tend to have more NRE as an early stage company because kind of every new feature request that we don't already cover can get booked into NRE. Although, you know, it's just nice because they're essentially helping pay to expand our offering.
Okay, great. And last question for me, Hall, is a two-parter. One is tell us a little bit about the pain or the sweat that your co-founders have put in so that we know if I write a check, we're aligned. And two, tell us about the exit and how we're going to make bunches of money off you.
Yeah, I mean, in terms of the pain, I mean, you know, this has been a 4-year journey. Nick's, you know, has his family involved. Myself as well. I've been spending a couple years on this company. You know, we have some dilution, but we're very well incentivized on the current cap table. Yeah, we're not going anywhere on this one. It's kind of right in the heart of our kind of a typical early stage company. I don't know if that answers what you were going after, but yeah.
Yeah, great, thanks. And then remind us about the exit, and then if Hall has anything else.
Yeah, so as I mentioned, you know, Nick and myself, we believe this can be a public company, but you know, a very likely outcome, especially in the space and especially with the competitors that we're addressing, these large consulting companies, as well as Palantir itself, who, by the way, our fourth board member is Alex Moore, was the first employee and is also on the board of Palantir. You know, we're starting to win RFPs directly from this company. They've reached out to us to partner, and then they reach out with their internal VCs. But they, you know, in this space, they would be a very natural acquirer. And, you know, that can happen anywhere from the kind of the 10 million to 100 million in revenue kind of milestone, which, you know, we expect to achieve starting next year.
Great. So my question is, who owns the data, and is there a data play here separate from what you've shown so far?
There's absolutely a data play. We used to pitch it. It just makes the presentation very complex. We own the data. So all of our customers so far have been completely fine with what we call, essentially it's like the Netflix model. They give us access to their sensors, you know, basically just via IP address. We turn that into a data set in the cloud and then serve it back to them on a subscription basis. It's our data. If they don't want to pay the subscription anymore, we keep the data. And then the data set itself, incredibly valuable. You know, applications range from autonomous vehicles to insurance companies who are very interested in this data set. You can imagine a world where instead of them just kind of guessing how dangerous your commute is, and you drive 15 miles a day, you live in place X, if they knew the actual safety scores of all the intersections you pass through on a daily basis, they could, have a much more accurate understanding of your risk.
Right. Are you doing anything with the data now? Any of those current applications, DFW and the like? Are you doing anything with the data at this point?
Yeah, so I mean, so the current kind of ROI for the customers themselves, for example, in Miami, we have a deployment and they already used it to change their signal timing and they saw a 70% reduction in accidents. So it's kind of, being directly used by the customers. But in terms of us monetizing it at a company scale, we haven't got to that point yet.
Great. And so after this round, how much more funding do you think you're going to need to raise before you're finished with the funding, or is this the last round?
I think realistically, we could, if, with this funding, we can probably, if that was our only goal, get to kind of a break even on a cash flow basis. But I think realistically, with the size of this market opportunity and the fact that the number of RFPs that go out in the space have gone from 10 when we started to now there's probably gonna be 200 or 300 this year, we'll probably, take a Series A and kind of go after the market with more gusto, so to speak.
And what do you envision as the exit here in this case?
Like I said, we would love to build a large company. That's our intent. But I think practically speaking, given how trying this space is, I think an exit probably in 2 to 3 years when we're in, the 10 to $20 million revenue range would, be fairly likely, just talking from a purely removed financial understanding of the company.
And what do you see as the competition today? Where is it? Is it in front of you, behind you, next to you? Where do you think? Where are you relative to the competition?
We have a good first mover advantage. There's one direct competitor that is also hardware agnostic. Most of our traditional customers sell cameras, and that we have a huge advantage over them because they, it's something like $20,000 to put a camera in an intersection, and we're charging something like $2,000 or $3,000 per camera per year. There's one direct competitor. They're actually based in UAE, and we've started being able to block them from a lot of the competitive bids because cities and states didn't realize that they're a foreign-based company. Yeah.
Are you planning to expand to Europe and other countries outside the U.S., or just remain U.S. company only?
We are. It's not our current market focus. We're just signed our first deployment in Riyadh. And now we're talking to a couple of companies in Tokyo, but those kind of have found us. We'll probably expand our BD processes to include them next year.
Great. Great presentation. Thanks so much for that. Drew, thanks for great questions as well. Let's go to our final presenter. We have Ken Mariusz of Synaptica, who will present next. So if you could launch your slides, Ken, and kick off when ready, and then we'll go to breakout rooms after that.
Okay, great. I will share my screen. Hang on a sec. All right. So I'm happy to share with you guys a major breakthrough in Alzheimer's. It is a personalized form of brain stimulation that focuses on a new target in the brain that's associated with episodic memory. And we have 2 phase 2s done, completely successful results in Alzheimer's and 2 phase 2 clinical trials. When was the last time you heard that? And it is a new take on an existing technology that's safe. So all of us know somebody who is affected by this hideous disease, which unfortunately it swallows up not only the individual, but also the family members in a way no other terminal disease does. And you might say, well, isn't Alzheimer's a graveyard of failures? Well, the problem is the industry has been focused on one target for 20 years. We call amyloid the usual suspect. Cleaning up amyloid is like cleaning up the ashes after the house is burned down. We need to look at other suspects. We need to find the arsonist who started the fire in the first place. So we need to look upstream of amyloid. We're focused on inducing neuroplasticity in the key networks that drive human memory. So what is neuroplasticity? That's when neurons strengthen and form new connections. So here we see synaptic dysfunction, obviously a hallmark of Alzheimer's. The synapses, the wiring of the brain is misfunctional. So if we can strengthen those synapses with stimulation, the idea is when you stimulate neurons, they strengthen. And so that's the idea of neuroplasticity. We could talk for hours about the mode of action, but suffice it to say that is what we're trying to do. And nobody argues whether or not stimulation induces neuroplasticity. The question is, can we get enough of it in the right places to slow down this freight train of a disease? Now, the key technology that we've invented is we're pairing TMS stimulation, there's a stimulator, with 64-channel EEG, not shown. When you pair TMS with EEG, for the first time, you can actually see in the brain the networks that you're stimulating. So until now, it's really been shooting in the dark, but really what this allows you to do is confirm target engagement. So the target in this case is the entire default mode network. That is the backbone of cortical integration, which is where memories are formed. And Alzheimer's being a disease of memory, that is the network that we want to strengthen. So we're stimulating at the precuneus, which is in the back of the head and the posterior parietal coming into view here. And what we want to see is propagation of the pulses throughout the entire network. That's what our technology confirms. Our scientific co-founders are funded by all the right institutions, and they have over 700 publications in prestigious journals. Emiliano's over at Harvard, and Giacomo's over at the Santa Lucia Foundation, which is a major neurodegenerative center in Europe. So this is the results from our second phase 2 study at 1 year. It was presented October 31st at this major conference, the biggest conference in the world on Alzheimer's. That's our scientific co-founder Giacomo presenting the data. That was the audience in attendance, and these are the results. We hit every single measure. So this is the primary endpoint. It's the global clinical dementia rating, which is the sum of boxes. It's how it's tallied. And by that measure, we slowed down the disease statistically significantly. The separation on this 18-point scale is over 1 point, which is considered clinically very meaningful, highly statistically significant. So we're slowing down the disease, in this case, by about 50%. Cognition, we are also affecting these markers of cognition. And then
I'm not seeing your slides.
Oh, they should be advancing, no?
No, I see you.
Oh, really? Okay, let me do the share again.
There you go. Keep going. Yeah.
So strange because it was showing on my side that was showing. Yeah, so we are slowing down the disease by over 1 point on this 18-point scale. On cognition, we're also slowing down the disease. And on measures of functionality, we actually slowed the disease by 87% on measures of function. So that is phenomenal disease slowing. Let's get this box out of the way. So we're slowing the disease by 87% in cognition and function, but we're also having an effect on behavioral disturbances in Alzheimer's. Those are some of the worst effects in the world. So you're trying to help this person and they don't know who you are and they're agitated and aggressive and screaming at you. Can you imagine like your own mother screaming at you, doesn't know who you are? That's another domain that we are having beneficial effects in now, the behavioral disturbances in Alzheimer's. So we hit the trifecta: cognition, function, and behavior. The worst thing that could happen to you is a mild headache, which happens in about 1 of 10 patients. It never stops therapy, but it can take a few minutes for the headache to subside. Nobody dropped out of our studies because they couldn't tolerate our therapy. And we got FDA breakthrough designation. We're published in major reputable journals. I'm getting some great press now from the likes of NBC. The ADDF is where Bill Gates puts his money for Alzheimer's. His father had Alzheimer's disease, so he has a particular interest here. Jeff Bezos also puts his money here, and the Estee Lauder family is the one who runs it. Anyway, they came to us after they saw the 12-month data, and we're in process on a $3.6 million investment. We're also being highlighted by RBC, which is North America's 5th largest bank. Why would a big bank like RBC be helping us? It's because they see an enormous IPO ahead of us. Now, every patient has to get calibrated, but all you really need is an MRI, which is loaded in the machine, and a finger prick blood test. That's all you need. 20-minute painless stimulation, and the system actually exists. This is not a mock-up. This system is actually approved for depression. All we're doing is we're repurposing it on a new target in the brain that's associated with memory. And we've got their FTO granted, so freedom to operate in any brain disease with this personalization technology. We also got our reimbursement codes just a few weeks ago, so we're well on our way to having Medicare pay for this, up to $22,000 per year. And we make money by selling the entire system and charging per use. So we could generate about $290,000 from each system, and that's just from 40 patients of the 4.8 million that are on label. And neurologists stand to make about $400,000 per system per year, enormous new profit center for neurologists. And remember, that's from just 40 patients. They don't make any money on the drugs. So here we're giving them an enormous new profit center. Again, 40 patients, 400,000. So do the math on that. We have a conservative pathway to about 900 million in sales. Of that 900 million, we have 700 million roughly in recurring revenue with drug-like margins. In the hands of a Boston Scientific, however, they could do 2.2 billion. And how do I know what Boston Scientific could do? Well, I was the head of strategy for Boston Scientific's billion-dollar neuromodulation division, which is the very division that would acquire us. I also ran the Cosman franchise, so I've sold capital equipment in 40 countries as the GM of that franchise for Boston. We got some of the biggest names in the world in Alzheimer's on our side who agree this could be a huge breakthrough. Jeff Cummings is one of the top docs in the world. Giovanni Frazzoni over in Europe similarly. And we've got some great commercial advisors as well. This convertible note funds an early AD study, so we're moving into the earlier aspects of the disease. It's running at 3 centers in Italy. We've got about 7 patients in the study now, so it's well on its way to full enrollment. The convertible note is funding that, and it'll convert into the Series A, which funds the pivotal study, which will run in up to 15 sites, up to 300 patients. But normally that would put us on the market by 2029, which is out here. However, we just got written confirmation, which I can show you under NDA, that the FDA will accept a 6-month endpoint here, halfway through the study for approval. And that changes everything. We could be on the market by 2028. So imagine that, a therapy that actually works with almost no side effects on the market for Alzheimer's by just 2028. And when we launch, of course, Boston Scientific could swoop in and buy us. They just bought Exonics for 3.7 billion. I was a part of doing a number of these deals. Medtronic also could come in. They've got a great neuromod business. Abbott neuromod plays all the time. LivaNova, great neuromodulation plays as well. Johnson & Johnson, GE, Philips. If we don't get bought, we could IPO. NovoCure makes a neuromodulation device for glioblastoma. They IPO'd for 1.8 billion. Now, the Alzheimer's market is 400 times bigger than glioblastoma. So think of that in the context of this exit. This $9 million note is moving fast. There's about 3 million left. Actually, now it's less than 3 million. We just closed another million. So I think this is about 2.5 left in the round for angels from 10 and others. We did have a special deal, and we do have a special deal through the end of March where we've lowered the val cap from 55 to 40. It also has a 20% discount. Amazing deal. It's only good through the end of March. My board has authorized it. It's a legal deadline. By the end of March, we must close that note and bring the val cap back up to 55. So if there's interest, put up your hand. We'll save you a spot. But this is going fast. And look, it's a breakthrough in the disease of the century. This is personalized medicine at the connectome level. It's a therapy that works. It's a moneymaker for neurologists. It's patented. It's got reimbursement codes. And by the way, it could be a platform for memory enhancement and other disease states. So if there's further interest, please follow up. My contact information is here, and we'll put some information in the chat to reach us. Thanks for your time.
Great presentation, Ken. Drew, what's your questions?
Yeah, thank you. Excellent presentation, and certainly a huge problem, as we all know. And sounds like you've made great traction. I think I'm just a little scared as the investor for 2 reasons. One is, the moonshot. You either make it or you don't. So I guess for you to share kind of, everyone expects you to make it to the finish line, but what's the backup, or what else? How else can you make money for investors? And then number 2 is just there's so many people working on this collectively. You're telling me 2028, which I think, given the FDA requirements, is logical, but the world's going to change between now and then. So how are you guys thinking about that as strategic leaders of this company?
Okay, those are 2 really great questions deserving of good answers. So on the first question, this is Alzheimer's. This is a tough area of medicine. So what we see here is headroom on efficacy. We are so much better than anything else out there that even in our phase 3, if we're half as good as this, we're still an enormous success. So you phrased it like it's a binary outcome, like the way you positioned it, you framed it as a white or black. It's actually shades of gray, all of which are successful. So this measure here is 87% slowing. That would be a phenomenal breakthrough. That would be just an absolute home run. 87% is almost a cure. But if it's 70% slowing, or 60% slowing, or 50% slowing, or even 40% slowing, those are all great successes where everybody does well, including patients and caregivers. So it's wrong to think of it as a binary outcome. It's better to think of it as a range of success criteria. Of course, if we get 20% slowing, well, okay, now we're in the category of drugs. which by the way don't work and can kill you. But any of those outcomes would be good for us. And then you said a lot can change in 3 years. Well, a lot has not changed in 20 years of trying. There's been hundreds of attempts, mainly focused on amyloid, that all have failed because they're focused on the wrong suspect. So, I would say that when we look at the pipeline, and Jeff Cummings is on our advisory board, what we see, so I'm looking for a slide here, what we see is nothing in the pipeline that could be disruptive, really, truly. I mean, you can ask Jeff Cummings himself, is there anything here that could be a knockout and be disruptive? We actually don't see anything that could be disruptive in Alzheimer's. Now, if a drug does come along and looks good, we can combine with that therapy. I will share one thing with you before I got to go, that is memory enhancement. So even if Alzheimer's doesn't work, we could still make money in memory enhancement. Look at this data, 60% boost to memory in healthy volunteers. So in people like you and me, we're able to boost memory by 60% from one session. That's a multi-billion-dollar adjacency. It could also work in stroke or TBI or many other brain diseases. So we do have backup indications too. And if they're all successful, hey, that's great. But Alzheimer's is our focus right now.
Thanks, Hall. What do you got?
Oh, are there any other questions from the audience? Please go ahead and post them in now. And after that, we'll move to breakout rooms. So my question has to do more with the FDA path there. What's the next step for you with this at this stage?
We have talked to the FDA about our pivotal study design, and they're okay with it. So we have agreement on the endpoint. We have agreement on the length. We have agreement on the number of subjects and the secondary endpoints as well. So we have a lot of agreement on the study design itself. Sorry, I have to move here. But we are moving into our pivotal study later this year. That's the idea.
Great. That's the last question I had at this point. So with that, I want to go ahead and wrap up today's presentations. I want to thank all the presenters for great jobs and what they did. Appreciate Drew for you coming on. And any closing words from your side, Drew?
Yeah, thanks. I appreciate the offer, Hall. I think, again, thanks to Hall Martin and his crew, 10 Capital. If you don't know them and then you're a first timer here, please do check out. They do a lot of things both in Texas and virtually. That makes it a lot. I think we saw some excellent companies today. So we call it time, treasure, talent. Even if you don't feel you can write a check, think about ways that you can help these companies, follow them, introduce them to others who can write checks, introduce them to customers, introduce them to Rolodex connections, I think. If people are coming to New Mexico, please look us up, nmangels.com, either an upcoming event or come and visit us on some of the things we're doing here, or bring your companies to our state. We're happy entrepreneurs to hear from you. We want to, our state needs so many things that a lot of you are national, but certainly we can help there. So I think, Hall, appreciation for you and what you're doing. Thanks to angels and entrepreneurs everywhere. And let's all work together so that more can be more, especially in today's challenging times.
Great. Appreciate that. For those in the audience, if you'd like to meet these guys, though, we are opening up breakout rooms. I'll be in one if you want to talk about, joining 10 Capital, what we're all about. And then you can join any of these that we have presenting today. With that, Kat will just go ahead and launch us into it, and just hit the join button. And we'll see you guys next time for another presentation. Have a good one.